Hello traders, the title of the video is how to combine Elliott wave trading and RSI divergence precisely. Do you use the relative strength index indicator or oscillator, the RSI, with the Elliott wave principle? Alright, so let's get started. So one thing I need to say to traders who want to learn and master the relative strength index indicator, the RSI oscillator, you can go and subscribe to the Pro Traders YouTube channel or check the playlist. I have like three or four playlists for relating to the RSI trading, RSI divergence trading, okay, at the Pro Traders YouTube channel. Recently, I have been posting some amazing tutorial about the RSI oscillator, and you want to know. The next thing that I want to mention to traders that are using the Elliott wave is that the Elliott wave practitioners use the Elliott wave theory, the Elliott wave pattern in conjunction with the RSI oscillator. Professional technical traders love the relative strength index indicator. Don't ask me why. Okay. So you are an Elliott wave trader, you start counting wave. And if you agree with me, from 2009, using the reference point 2009, I'm on the monthly chart. Here it is. Pay attention to the red numbers, not the pink one. Ignore the pink one. Pay attention to the red one. So this is my first wave using the reference point 2009. Second wave, and this is my third Elliott wave, and it's my fourth wave, and the fifth wave right here. Big choppy fifth wave. Feel free to disagree with that wave count of mine or compare it to yours during the time period 2009 2015. You can notice that as we reach the fifth wave right here, we see that the RSI period 14 was declining rapidly. It's a beautiful pattern. Do you know this? If you don't understand what's happening here, I have a very, very important video I want to share with you today. And the title of that video is how to trade the RSI oscillator with eyes wide open precisely at Day Pro Traders YouTube channel. It is phenomenon when the RSI is declining from the overbought zone, well above overbought, and you return like this to the oversold zone. And during that time, you see that the price will go ups and down. But at the time when the RSI reaches the oversold zone and start turning, the price will comply with the RSI. So there is a disagreement first. When the RSI is going down from the overbought to the oversold, price doing all sorts of things. This is a typical pattern here. But while the RSI finally in this case, it looks like the RSI is controlling the price. Now it reaches the oversold zone, straight to the price. Now I reach the oversold zone, follow me. You see, this is it. It's happening here. Look, RSI, the price is now aligned with the RSI. Before, you see, it was doing its own thing. And now the RSI say, I'm going down, I'm resetting myself. Now I'm ready, follow me. So that video is at the Day Pro Traders. Subscribe to Day Pro Traders channel. How to trade RSI oscillator with eyes wide open precisely. Now, a lot of traders here, you may see that there is a divergence. You can see because the RSI was declining and the price formed a new higher high at the end of our fifth wave right here. So here you have an RSI divergence. Here, yes or no? Como se te les kaput, you implement a top down telemeter, you are selling it down. Okay? But if you were only counting your wave on the monthly chart and you agree with my wave count, at this point in time you'll be saying a correction is about to begin. This stock is going to come down big time, yes or no? But look, just like this. Not much, okay? But because there is a higher degree wave count that is underway, you can see the pink line. Now I want you to pay attention to the pink line, to the pink numbers. Before we were paying attention to the red one. So now, if you look at the pink one, it's the first wave. There's something here I need to discuss with you when we go alone. I will tell you more because I discounted one session here. Why? Because it is not useful to me, and I can't see much of this price structure here. I can't zoom into it, so I discount it. That may have a negative effect on my wave count, but well, that's what I got. All right. So this is first wave of a higher degree, second wave of a higher degree. Attention to the pink numbers. The move that we are counting 1, 2, 3, 4, 5 before up to here. That's the third wave of a higher degree. Attention to the pink third. So from here to here, subdivided into 5, that's the third wave of a higher degree. So in fact, when we were here on the monthly chart, we were saying fifth wave, reference for 2009 to 2015. We had a fifth wave, yes or no? We refer to the higher degree wave count, though we are expecting a correction. We know that that correction is likely to be shallow correction because it's a fourth wave of a higher degree. The fourth wave is usually a shallow wave. So that correction that we were expecting here, we know more because we check the higher degree wave count and we know that it's not going to be a deep correction. Here it is, fourth wave of a higher degree. Now we are now in a fifth wave of a higher degree. So this is a signal of the RSI going down from overbought to oversold, plus that divergence is just now, this is the signal to buy the fifth wave. We are now in a fifth wave of a higher degree. So you may say, Joe, how do we use that? This is another divergence here. So you see the first divergence here, referring to the wave count 2009 to 2015, our fifth wave here. The red 5, all right, we saw it divergence, trend line is broken. Now we slowed it down, but we know better because we know that it's just the fourth wave of a higher degree that is developing here. RSI fire another signal here. Now because we check the higher degree wave count, we know that RSI is starting to buy the fifth wave of a higher degree. This is another divergence. And if you want to know more, all you need to do is to go to YouTube search RSI Divergence by Day Pro Traders YouTube channel. Don't watch it anywhere else. When I highlight that specific pattern, what usually takes place, the phenomenon that the RSI is doing, you see that the RSI will be going down, all right, and the price will be going up. That's what we're talking about. Price will be going up. Now, price continue to go up, and then finally RSI start going up, okay, and then RSI will peak, which means when we say RSI peak, it means that the common center line along here is broken. Are you subscriber of Day Pro Traders? Peak and low of RSI. Common center line is put here, common RSI peak, not definitely overbought, but peak, which means it has gone below its own common center line. It has peak. RSI has peaked, so there was first RSI going down, price going up, RSI going up, price continue to go up. Now RSI has peaked, breaking its own common center line here. That's an invitation to sell the divergence. So the divergence was indicated to us here, but the time to sell is here. This one is a little bit different because we have a scenario here when the price bounce up a bit, doing its own thing, which I already explained to you, while the RSI was going from overbought to oversold. Are you getting it now? Now, what I'm trying to communicate to you now is that you need to learn more to master the RSI and Day Pro Traders, know all the pattern of the RSI, what we are talking about, and then combine it with your wave count, your area wave analysis, because the professional area wave practitioner, always the technical indicator that they prefer, in fact, I would say the only one that they truly like is the RSI. Don't ask me why. All right. So this is it. So if the RSI here, talking about peak, all right. So we will just leave the line here, leave it there. Is it going to peak? If it break below it, we know it has peak. Now we switch our attention to the price, expecting a correction. Okay, but again, in all video, you'll notice that I always say the same thing. Why? Because it's so important. Anytime we say fifth, third, and first, what do we think of? Extension. So RSI may peak here, and you start selling and say, oh, correction is about to begin, everybody should sell and forget. But then, the fifth wave may be extended. So when you pick here, you receive a sell signal, you are selling. Remember that the fifth can be extended, the third can be extended, the first can be extended, and don't be surprised if the price continues to go up. So how do you handle that? Oh, did you ask that question? You unbelief boy, my friend. You unbelief boy. You unbelief boy. Right. Now, if you did ask that question, that's a very important question. How do you handle that? That's a very important question. Here we are. What you can do at this junction is to use the Fibonacci extension of this fifth manual wave of this move up here. So you remember, first, pay attention to the red, second, third, fourth. Apply Fibonacci extension to that fifth wave and highlight the 138.2%. Where is it? Am I doing something wrong? And highlight the 138.2% from the top to the bottom. Where is it? Yes, it's this here. So that's where we are now, 138.2% Fibonacci extension level of that fifth wave. Apart from that, you have it. There's a target. That's why people acknowledge that level now. But okay, stay with me. There's one more thing you need to do. Apply it to the whole you see from here. That's third wave. Apply Fibonacci extension to it. And you see a target in the zone of 70 and 75. Yeah, we are in the zone of 75 there. So you may say, John, why were you saying 70 first? And I'll say to you, you're unbelievable. You're asking too many questions. Now, the reason why sometimes I talk like this is to get traders to follow us, to make it more entertaining, because I don't have any skill when it comes to entertainment, but I do my best, okay, to cheer you up as you are watching the video. That's what I do. So, so you can see the reason why I say 70 also, because not all traders are drawing their Fibonacci extension the same way. Some traders will put it at the closing price, some traders will put it all the way to the top. So when you put it to the closing price, you will have a target also at a 70, especially if you go to the yearly chart. Try to do what I'm doing here. You'll see that there will be another target at 70. So our fifth wave is at the first target. You applying Fibonacci extension to this fifth wave here. So people are monitoring. If you continue to go up, next target 70 level, the second target at 75 level. Be careful. The fifth wave can be extended. Monitor the RSI, but attention on the price. Draw a common sector line along the price. And even if you are talking about, oh, correction. Again, another warning. Though we are using the RSI Divergence in the fifth wave, which is very, very useful tool that we must use whenever we see any fifth wave or any fourth wave. We can use the RSI. Anytime you count fourth wave, look down on the RSI, because the RSI traders, the Elliott wave practitioners, are using the RSI in conjunction with the price. Fourth and fifth wave. Attention to the RSI. Even if you are counting manual, anytime you see anything level 4 or fifth wave, pay attention to the RSI. Again, the RSI will give us a warning, but the price must confirm it. Even if you are expecting a correction, all right, this is one thing also probably I have to record a video about it another time, is that when Elliott wave traders are talking about correction, sometimes we get a bit too excited to say, yes, it's going to come down, it's going to go back up, and so on and so on. But sometimes the price, you may have a shallow correction. You may have a triangle, which is a shallow correction, or a flat correction, the classic flat correction. And you may say, is that the end of a correction? Yes, that's it. And then the correction will drag on. But the point I want to make to you today is that whenever you are using your Elliott wave, like we are doing now, analyzing a specific stock, the stock we are analyzing here is Amtech. Is that correct pronunciation? Amtech Incorporated, EPIC AME, belonging to the industrial sector, diversified industrial, okay? So whenever we apply Elliott wave principle to a specific stock like this, and you say, all right, I check the higher degree, I check the lower degree, everything is pointing to a correction. Now, If you're an investor, you can secure your gain, you can come out, all right, whatever you want to do. Protection should be your first scenario. Control or risk should be your first step, all right. The next thing you need to understand is that if we're going to have a proper correction, pay attention to the S&P 500. Right? If the S&P 500 also is signaling to us that, guys, the market is about to correct itself, the market is about to correct itself, and we see other stocks that are flashing the same thing, then we are very, very careful. Another thing I need to say to traders, few years ago, all right, which you need to understand, the financial market has changed a lot since 2008. It's a very bad thing for the market to become a bearish. And there are, dispositive. Can we use that word in English? There are things in place in the market so that the market does not go to the scenario that it went to in 2008. So, which means the natural progression of the market is up. So bearish traders, all right? So in fact, in some countries, they have banned what they call short selling and so on. Now, the reason is to protect investors because some people were exaggerating, were selling stock that they should not sell, creating all kind of distortion in the market. But there is another distortion that can happen in the financial market when the market is going up forever and everybody is resisting the correction. That can create also a distortion. But the point I want to get to you is this. Whenever, as from 2008, you are trying to sell a stock, don't adopt the mindset of post 2008. Be gentle, or be gentle, because it's a bad thing for the market to go down, and then there are things in place to punish the bear. All right, that's all. Okay, so to summarize or to condense this discussion, the Elliott wave practitioners love the RSI indicator, the relative strength indicator. They use it during the fourth wave and the fifth wave. They usually use the Elliott wave specific patterns, talking about RSI going down from overbought to oversold and then turning direction to catch the fifth wave. And also, they use the RSI divergence. All right, but you want to know what's going on? The RSI will flash first the divergence. You see here, it's flashing it, it's going down, probably going down, going down. One should acknowledge the RSI divergence without assuming anything. Follow the price. If a signal is fired, you are selling. Try always to check the higher degree wave count. You see, on the fifth wave, you say, okay, it's going to go down. You're on the hourly time frame, you say, all right, that's the fifth wave. That's it. All right. If you're on the hourly time frame, which time frame will you check? You check the daily time frame. The higher degree wave count for the hourly time frame is the daily chart. You're on the daily chart frame, you see your fifth wave, you will check the monthly time frame. You're on the monthly time frame, you will check the yearly charts, and so on and so on. Higher degree. So with those things together, you have a bit of a idea whether you're going to have a shallow correction at the end of that fifth wave. That correction will be shallow if that correction happens to be a fourth wave of a higher degree. The correction can be shallow or deep. Especially it will be deep if we have fundamental reason to sell, and the S&P 500 also is flashing correction together with that particular stock. Then all bells are ringing. Well, we can't ignore it. Assembly point. Fire alarm is ringing. Assembly point. All right. So this will conclude our discussion today. I hope I have added something new today. If not, mark it down. I will say, all right, that was a poor performance. I always check the rating, the comments, all right? And this is helping me to push this channel in one particular direction. What trade they like, what trade they dislike, what's going on to their mind, and so on and so on. If you find this video useful, let us know by giving us the thumbs up. If you think it's another poor performance, mark it down. If you think it's an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about how to combine Elliott wave trading and RSI divergence precisely. Was he precise? Well, let me know. Happy trading to you all, and speak to you soon.